Hello, lovely people out there. How are you all doing? I'm Kate Hill, and I am here to give you the best unbiased and honest commentary about our property markets, along with some really awesome hints and tips. Today, I have got a Melbourne property update for you. It's a bit of a longer one as we look at the city market and also what some of the regions are up to, so stick around and stay tuned. Now, before we get started, today's question. Who is in Melbourne out there? Are you buying? Are you trying to buy? I would really love to know where you're buying and what you're up to. Tell me your stories. And just really quickly, if you're interested in the Sydney property market, then this video here is a must-watch for you. So remember, folks, the Melbourne property market has been one of the strongest and most consistent performers over the last 4 decades. Over those last 40 years, the median house price has increased by 7.9% per year on average, and the median unit price has increased by 7.73% per year on average. Now, these are averages, of course. Actual growth rates are all very suburb specific. But having said that, think on this. Melbourne's population was growing at around 120,000 people per year. That is like adding a small city in size each year to Melbourne's population. Of course, like Sydney, this has slowed down due to closures, border lockdowns, and it will resume in due course. International and interstate migration will return once we get through all these challenging times. The Victorian economy has consistently been Australia's strongest state economy, creating more higher paying jobs than other states. And Victoria's economy will surge again. There's no reason to see why it won't. First home buyers are back in the market in force, buoyed by the home builder grant, pent-up demand, renewed enthusiasm, and it's helped by historically low interest rates. There has always been strong foreign interest in Melbourne from tourists, migrants, investors and developers, and in time this will return. So looking at the Melbourne metropolitan area, house and unit prices rebounded over the final quarter of 2020, pushing both house and unit prices to new record highs. Melbourne markets bounced back quickly following the release of restrictions after that second wave lockdown. Domain has reported that attendance at open homes in the 4 weeks to mid-January were 14% higher than the same period a year earlier. Also from Domain, its quarterly price report published at the end of January shows that house prices and apartment prices overall were higher in that December quarter than a year earlier. House prices were up 3.9% and apartments 2.5%, which is an amazing result considering that everything Melbourne dealt with in 2020. But the most stark evidence was provided by that quarterly figure. In the December quarter, the median house price rose 5.3%, while unit medians increased 4.4%, which is the highest among the capital cities. CoreLogic's latest house price index at the end of February showed Melbourne's monthly growth at 2.1%. Now, buyers and sellers have returned to the market with enthusiasm, as I've said. The easing of restrictions marked a return of those buyers and sellers. Buyers have responded quicker as pent-up demand was unleashed. Seller and buyer activity has lifted, and homes newly listed for sale have been absorbed really quickly by competing buyers. Market activity pushed really late into December, and the January selling season began much sooner and much more strongly than we would normally see. That traditional holiday slowdown was really non-existent this year. So despite the economic shock of COVID-19, Melbourne's housing market defied the odds. First home buyers back in the market using all those government incentives, low mortgage rates, and a much deeper savings pot as COVID restrictions reduced discretionary spending. Changeover buyers, upgraders, they've all been enticed by cheaper credit and an altered wish list post-lockdown. More on that later. The traditional first home heartlands and lifestyle locations in Greater Melbourne continue to be top performers. Now, in terms of the rental market, the disparity in rental markets across Australia has been extreme. At the one end of the spectrum, we've got extremely tight rental conditions in cities like Perth and Darwin, where both house and unit annual rental growth is above 10%. At the other end are the unit rental markets of Sydney and Melbourne, where rents have sunk over the last year, down 5.3% in Sydney and 8% lower in Melbourne. Higher rental supply due to that recent history of investor exuberance, weaker demand from negative interstate migration, and more recently, a demand shock from closed international borders, where Melbourne is a primary recipient of migrant arrivals. Vacancy rates rose sharply as a result. A few months ago, it would have been typical to see vacancy rates around the 15 and 16% mark in those inner city suburbs, with weekly rental declines typically at around $100 per week since March 2020. The sharp reduction in rental demand within these locations is resulting in lower rents, of course, and extended vacancy periods, as explained. Now, ultimately, this may have a negative effect on sales prices, given that particularly investors are concerned about rental returns and also whether there will be any upside capital growth in the next few years. However, the weak conditions across Melbourne unit markets does look to be turning a corner. Melbourne unit rents edged higher in February after falling for 9 of the previous 10 months. The improvement in unit rents is likely to be at least partially seasonal, as demand from domestic students generally rises earlier in the year, but it could also be attributable to more people returning to work in the inner cities, as well as workers in some of those hardest hit industries, the hospitality, food, accommodation services, returning to employment. Until international borders reopen and migration rates return to their pre-COVID levels, and more substantial improvements in inner city apartment rents, it really is unlikely. Weaker rental conditions in Sydney and Melbourne relative to rising home values is evident in the gross rental yields, with yields across both cities falling to fresh record lows in February. Melbourne's gross rental yields averaged 3%. So depending on the price you pay, of course, positive cash flow opportunities are less likely in these affected areas. So I do still urge caution when buying for investment purposes in the inner city unit markets. Moving on to the regions. Victoria is a state with some of the best performing regional markets in Australia. They recorded the best capital growth in the past 2 years and continue to pump strongly. Some of Victoria's regional centres have economies that are really well suited to withstanding global shocks and economic crises, with most of their jobs in sectors that have thrived in these restriction phases. Figures show that regional Victoria's median house price is up 2.6% in the last month, 6.2% in the last quarter, and 8.3% in the last 12 months. Agents are reporting that Victoria's coastal markets, for example, are literally going nuts. There's no slowdown in sight for the booming markets in Victoria's popular coastal suburbs, as buyers rush to find a seaside home, and buyers face hot competition for properties in suburbs in places like the Mornington Peninsula, the Surf Coast, and potential buyers are making offers within days of listings occurring. So following the nationwide trend, the closure of international borders, which stopped people from holidaying overseas, coupled with growing interest in working remotely, it's really strengthened those beachside markets. We definitely see this trend continuing well into 2021 as people reassess their lives in a post-pandemic world. Now, regional Victoria continues to excel on price performance, with more than 90% of locations across the state recording price growth in the past 12 months. 40 towns or suburbs achieving double-digit increases in their median house prices. The key regional cities of Ballarat, Bendigo, Geelong have all got multiple suburbs with median price growth above 10%. Now, this is also true for key municipalities southeast of Melbourne, including Cardinia, Latrobe Valley, East Gippsland. Right across the regions of Victoria, there are towns with annual growth above 10%, including several above 15% and even 20%. In Geelong, suburbs like Corio, East Geelong, Barwon Heights, Newtown, Grovedale, Geelong West, Belmont, Ocean Grove have all increased in value. They're not the only ones. It's also been a great year for Bendigo, Strathdale, Eaglehawk, Epsom, North Bendigo, Kennington, Long Gully. They've all grown in value. So have many other suburbs in Bendigo. And these are suburbs where the median house price is in the 300,000 and 400,000s. Ballarat has also done really, really well, with virtually all of the city suburbs recording annual house price growth of at least 9%. The Cardinia LGA in the southeast of Melbourne there has multiple growth locations, including places like Cockatoo, Emerald, Beaconsfield. A little further east, the towns of the Latrobe Valley are growing fast, headed by Moe and Churchill. East Gippsland towns with strong uplift include Lakes Entrance, Matung and Paynesville. Now, a report published by Domain in late January depicted the regional Victoria boom from the perspective of local government areas. House prices in every regional area of Victoria had price growth over the past year, with some regions up by as much as 18%, according to this Domain house price report. So with plenty of affordable properties on offer, those thriving regions really are sure to continue to attract tree and sea changers. And with those prices, low vacancy rates, investors can buy affordably, achieve rental yields of 5 or 6% for houses, sometimes higher, and in locations with really good prospects for capital growth. The affordability factor is now, of course, also attracting those home buyers who are moving away from those bigger and expensive cities in search of the better quality lifestyle without compromising access to good employment opportunities. But remember, people, different areas are doing different things at different times for different reasons. If you are investing, not every area is suitable for every investor. So we are going to keep you updated on all the comings and goings of the nation's property markets. So please don't forget to just quickly subscribe to the channel. Leave me a comment below. Tell me what you're up to. Hit that like button too. I really appreciate the support, and I will see you soon. Bye.